As we've been telling you, Yahoo, one of the big reasons for the tech sell-off this morning. Here to discuss Yahoo's earnings is Yahoo's Chief Financial Officer, Susan Decker. And good to see you, Ms. Decker. Thanks for joining us.
Thanks for having me.
So it's all your fault this morning, I guess, right? Look, we get that the 40% year-over-year growth in net income is very good, but Yahoo clearly lost market share in paid search in November, slipping about below 30%, while Google gained market share in the period. Look, this is where the money is. What's the problem, and where do you peg your market share in paid search now?
Well, let me start with, we did feel like we had a very strong quarter in terms of the overall growth, 36% in revenue, 40% in EBITDA, and we put out guidance for the first time for 06. In terms of search specifically, we've said for quite a while that our aim was to maintain our share on an algorithmic basis, and we don't look at it month to month. We look at it over a period of a year, 2 years, 3 years, and we feel really good about what we've been able to accomplish, having only been in the business for a couple of years here. The place that we have also acknowledged that we could be doing a lot better is on the monetization side. So our focus has been to maintain the traffic, because ultimately if we can improve our algorithms to get more revenue per search or piece of traffic, we can generate a lot more revenue for shareholders. That's a huge priority for the company. We've talked about it a lot last year. We talked about it more on the call, and we gave a specific timeline on this call for the first time. So we see this as all upside. And we think we're going to be very deliberate and measured and phased about our rollout, but we see this as opportunity in the future years for investors.
I understand that it's important to get those numbers out and to get the spin and the positive aspects of it, but even Terry Semel, your CEO, acknowledges that Google has, in his words, has built a better house than Yahoo has. Now that Google has clearly grabbed the lead role in key growth areas, such as convergence in TV, computer, mobile phones, what's Yahoo doing to avoid continuing to slump lower and lower? I know you say you look at it at a year basis, year over year, but we're now at 2 quarters in a row which Yahoo failed to exploit the blockbuster growth in online advertising, things like that.
Well, again, when you look at the total advertising market, which is a big market and one in which we have a very favorable position, it's growing expected to grow about 30% in the next year, and our guidance for the year suggests very comparable growth to the market. We've actually gained share of the total market in the last few years. Where we've lost share has been in the search market. We've gained in brand, and the two have, brand has actually more than offset any losses we've had in search. The losses in search have come because we don't have the monetization engine out. As Terry said, and as I just mentioned, we are rebuilding the entire platform. It doesn't take overnight. It takes more than a year to do that, and we want to be careful about our rollout. So we see that as upside because we're currently not monetizing as efficiently as our competitor and as efficiently as we can. But we wanted to be careful and make sure everybody understood that we're not looking for a lot of impact from that in 2006. We see that as 2007 and beyond. Okay. In the meantime, our brand business is going great.
Am I hearing you say then that you have your plan, you're just going to be quiet about it, and you will strike just as Google struck with say, for example, another deal this morning, Google in automated advertising?
Our plan from the very beginning in search was we acquired 2 companies over the period of a year. And we then took a year of development to roll out algorithmic search. That's the traffic side. That's been our primary priority until last year. And last year we acknowledged that we didn't feel we were doing as well in monetization as we could, and that was going to be the next priority for the next year. That's our focus, and we expect that we'll see very significant improvements in our ability to monetize each click later in 2006 and really expanding in 2007.
Lloyd Braun is your digital media entertainment head. And I can ask this question because my sister went to high school with him. So where's he going? There's a strong rumor out in Silicon Valley and in Hollywood that he's going back to Paramount.
Well, maybe you should ask your sister, because we hear these rumors all the time.
But he's with you.
On a variety of different things.
I think just got there.
Yeah, he's great. He's doing a great job. He's built a great team. We have leading positions and traffic in most of the major properties in his group. And we feel like we're in a great position in that area.
But is he able to go? Does he have the type of contract where he would be able to leave and go back to Hollywood?
You know, our philosophy at Yahoo is not to operate under contracts. We want people to be here because they want to be here, and we've had a great track record with retaining talent. We were just voted as one of the top 100 companies with places to work, and I think our track record speaks for itself. And Lloyd's doing great, and he's built a great team.
We know you struck a content deal with the big blog site Gawker. How do things like bloggers and podcasts, aka new media, play into your future?
Social media, which is what we call this, is one of our critical strategies as we move forward. The key is that we want to try to make consumers be able to be publishers, allow them to find things, to create, to manage information, to personalize it in ways that is exactly what they would like. So we've acquired a number of companies, Flickr, Delicious. We've launched Yahoo Answers. We've introduced 360. We have license deals with a number of companies, and it's such early days, but we're seeing some of our most exciting traffic growth in this area, and we think it ultimately will make our site even more sticky because people put their personal information with us and want to come back and manage it and share and create it.
Well, I'm just looking at the stock. It is down $4.18, but in full, being things equitable here, Google's down about $12.71. So everybody's down, at least in the space. Susan Decker, thanks for joining us. Yeah, tough day
All right,
for
thanks
everybody.
a lot.
Susan is Chief Financial Officer at Yahoo.